Buying a home might seem intimidating, like taking a tequila shot for the very first time. But with the right preparation, it'll go down very smooth. And before you know it, you'll be celebrating taking shots in your new home. Today, we're going to be talking about the affordable mortgage program. I'm going to be breaking it down for you step by step, how you can qualify for this amazing program, cater to first-time home buyers and repeat home buyers with low down payment options. We're also going to be talking about myths. You know, there's a lot of myths out there in the home buying process, and I want to make sure that you don't believe everything you hear out there. Talk to the professional right here. Quick myth buster. Do you think you need 20% down to purchase your first home? Nope. You need a minimum of 3% if you're a first-time home buyer. And with these amazing affordable loan programs, you can definitely buy now. Before you take your phenomenal tequila shot, Jorgito likes to prep it not with the lime, but with grapefruit, just like preparing you for homeownership by knowing what options you have. What is affordable homeownership and who is it for? There's several homeownership programs out there with affordable lending, such as Home Possible, HomeReady, and My Community Lending. These are all phenomenal programs catered to the first-time home buyer. It has options to low to moderate income buyers. It's catered also to help self-employed borrowers who can't qualify. The type of properties that are eligible for this are single-family homes, condos, multi-units, 2 to 4, and townhomes. You can go as little as 3% down on a single-family 1 unit, or you can go as little as 5% on a multi-unit. You do have to complete a home educational course that you can take online or in person. Also, what I love about this program is low mortgage insurance, not like the standard mortgage insurance if you do traditional conventional financing. Why does affordability matter? Rents are rising faster than home prices in certain areas. Buying now locks in your home ownership costs. And why home ownership? It builds wealth over time. So on average, home prices appreciate anywhere between 3 to 5% and some higher in your local area. Check with the real estate agent to get accurate numbers. These programs are specially designed to help buyers afford a home. These are some key factors that I'm looking for. Credit score. Like I said earlier, a 620 score and above means you're eligible for this program. Your debt to income ratio cannot exceed 49.9% of your income. And we are going to definitely be verifying your employment and income. There are a lot of misconceptions in regards to employment, income, but check with your local lender, like myself, on how you can qualify based on your current situation. So let me give you a real life scenario that I just helped get pre-approved, a first-time home buyer that wants to buy a multi-unit. He was getting quoted by another lender 5% down, needing 6 months of reserve. But he wasn't informed about this affordable Home Possible program that you can put a minimum 5% down on a multi-unit, needing 0 months of reserve. You know, sometimes 6 months of reserve on a payment for $3,000 a month can be $18,000. He didn't have that extra money. So my real estate partner referred me this client that wanted a second option, second opinion. So after looking at all his paperwork, he definitely qualified for this Home Possible program, needing no months in reserve. So always make sure that these programs are out there to help the first-time home buyer, especially if you don't have a lot of money in the bank. So right now, this person is out there searching for his multi-unit and not needing to worry about coming up with 6 months of reserve. So check with your local lender about these kind of affordable programs that can cater your needs. Now it's time for the shot and choosing the right mortgage program that is affordable to you. Cheers. Let's talk about the Home Possible Mortgage. Freddie Mac Home Possible Mortgage offers more options and credit flexibilities than ever before to help your very low to moderate income borrower attain the dream home of owning. Minimum credit score requirement is 620. very low down payment options, such as 3% for single-family homes and 5% down for multi-units, which is 2 to 4 units. They're flexible down payment options and low mortgage insurance. Another one is the HomeReady by Fannie Mae. This program is more relaxed guidelines for borrowers with low to moderate income for purchase and refinance transactions, so you can also refinance. Income cannot exceed 100% of the AMI, which is area median income for the county in which your property is located. 1 to 4 unit primary residents are eligible, but only a single family condo or townhome is eligible for 3% down. Multi-units, you can go up to 2 to 4 units with 5% down. You're not allowed to have a non-occupying co-borrower. High balances are not allowed with loan to values over 5%. At least one of the borrowers have to take a home education course, could be either in person or online. And you don't have to be a first-time home buyer, which is amazing. Let's debunk some common home buying myths. I need perfect credit to buy a home. Not with this program. If you have a 620 score and above, you are eligible. I need a lot of money to put down being a first-time home buyer. Nope. You'll need a minimum of 3% down if you're buying a single-family home, condo, or a townhome, and 5% down from a 2-unit to a 4-unit. Also, I need to be at a current job for over 2, 3, 5 years. No, as long as they have a 24-month employment history, you are eligible. So these programs are catered to you. Also, I need to make a lot of money to buy a house. That's not true. You know, these programs are definitely catered to your income, and it's going to definitely help you purchase a home. Let's talk about some benefits of homeownership. If you're renting right now, doesn't mean you're safe. Doesn't mean your rent can't go up. Doesn't mean the landlord can't say, hey, you got 30 to 60 days to move out. I'm selling you my house or my property, and it needs to be vacant. So owning a home, you don't have to deal with that kind of stress. Also, when you're renting, are you paying your mortgage? No, you're paying your landlord's mortgage. Remember, the interest rate on a rent is 100%. So you can't compare 100% to the current rate that right now that the market is. We're between 6 and 7%, which is phenomenal. Owning gives you the ability to refinance later. So for example, if you purchase a home and you have a 7% interest rate and the interest rates drop to a 5, 4%, does that mean you're locked in at 7% for the 30 years? No, you have the ability to refinance, to drop your interest rate, lower your monthly payment, and you're not competing with other home buyers on a property that is out in the market. So take the steps now to buy today. Also, I want to hear from you guys. Drop a comment below. Let me know, why are you not buying? What are you scared of? What have you heard that you're not eligible or you don't think you can buy? I'm here to help. With over 28 years of experience in the mortgage lending field, I help thousands of single moms, single females, families, a lot of people purchase. And don't be scared. Let me know what's stopping you from buying today, and I want to hear your thoughts. So what happens after you close on a home? You have to understand your monthly mortgage payment, the breakdown, what's included in it, principal and interest that pays actually the mortgage back, property taxes, homeowners insurance, and if you put less than 20% down, you're going to have private mortgage insurance. What do you expect in the first year of homeownership? Remember, you have to set up your utilities, gas, electric, water, garbage, your utilities. So make sure you're setting that up. You always want to budget for your maintenance. How to manage your mortgage responsibly to avoid financial stress. I always recommend my buyers that are already homeowners to set up an auto debit from your account, automatic payments. You know, one of the biggest things that I get as a lending professional is, oh my God, I forgot to make my mortgage payment. Oh my God, I forgot to make a monthly payment. But if you set up auto payments with technology now these days, You can have text reminders, you can have call reminders, email reminders, or you could just have the money be taken from your bank account, your credit card. Obviously it's a credit card that's offering you a lot of incentives such as rewards, cashbacks, any type of mileage rewards that helps out. Always remember to set up auto debit or auto payment from your bank account so you don't have to have the stress of falling behind, because a 30-day late can definitely affect your credit. So you want to make sure that you're always paying your bills on time. What are some long-term benefits of homeownership? Money. You're going to make equity. You're going to build wealth. And for a lot of clients that, I always ask, what is your motivation to buy? And they say generational wealth. They want to leave something behind to their children. What better to leave behind than a house, a property that has a lot of equity or could possibly be paid off in the future? So remember, your property appreciates value anywhere between 3 to 5% or more, depending on your area. So every year you're going to be making money. So that's very important. So remember, you're building wealth through home ownership. Remember, being a homeowner, there's tax benefits. And right now we're in the tax season. You file your taxes. Property taxes you can write off, and the mortgage interest is tax deductible. Talk to your local accountant, tax preparer, or CPA that's going to give you more information on the benefits of homeownership. If you're renting, you cannot declare that rental on your income tax, but homeownership, you can declare your mortgage interest. Check with your local tax preparer for more information. Do you know there's homeownership assistance programs grant free money being a home buyer already? Check with your local area to see what options. I'm in the Chicagoland area, and Chicago just came up with this new grant that helps low to moderate income homeowners qualify for a new roof and a new deck. So there's programs out there available to you. Also, do you know that this program is not only catered to home buyers, but homeowners? What does that mean to you? What does that look like? You can refinance. So if you end up closing with a higher interest rate and the market turns better and the rates do drop, you can take advantage of this program by refinancing to drop your interest rate, which in effect is going to drop your mortgage payment, and it's going to save you some money. So check with your local lender or myself to see what kind of options you have. Taking that first shot might seem scary, but once you do it, it goes down super smooth. Are you ready to take a shot at homeownership? Let's talk. Like, comment, and subscribe for more mortgage and tequila content. Drop your biggest home buying question in the comments. Call today to see what program you qualify for.